Hi, everyone. Welcome, everyone, for joining this STACS showcase session. Okay, the topic is Over New World and Appreciation of Fine Technology in Financial Institutions. My name is David. Okay, I'm the Executive Director of STACS, and I'll be the moderator for this panel. Okay, first of all, it's my privilege to be on this panel as I have three veterans, okay, three veterans from the financial industry. All of them are from prestigious organizations. Okay, first I will introduce Ivan. Ivan he's the Senior Managing Director from EFG. Okay, and next we have Andrew. He's a CEO from GFX Asia. And finally, I have Roland. Okay, he's the MD from Syndrome. Okay, I really appreciate all three speakers for taking time to join this panel. And today's topic is actually very interesting, okay, and very relevant for everyone who dial in to listen to this. So as we know, in this COVID-19 global pandemic, okay, every organization is exploring, okay, how to adapt to the new world, okay, with new technology, okay, and also individually, okay, our three speakers here do have a lot to share in terms of personal experience with over new world. Okay, on logistics side, we'll first start off with the panel discussion, and then we'll follow by the Q&A. Without further ado, we'll have the three speakers to do a self-introduction. Okay, if I may, I will first ask Ivan to do a self-intro, and then followed by Andrew and then Roland. Ivan, over to you.
Hi, thank you very much, David, for the introduction, and really thank you for inviting me to this panel. It's really exciting to be able to participate. Quick on my background. I started in the market in 1986 as a junior FX trader. I went through the training program at UBS at that time, and I've been in the industry pretty much since then, mostly in FX, but I would say in the last 10-15 years I've been involved in wider set of markets, so more like global markets in a way, although I did take a break around the year 2000 for a few years to run technology startups, and then quickly after that, as I didn't become a billionaire, I decided to come back to banking. Although I managed to bring some of the experience that I accumulated by working in the technology sector, not so much on technology because I'm still quite green and I don't really understand technology in a way, but more as a in a way user first, but also in running projects that start from scratch and then eventually they become a company. So this is a really important learning that I brought with me all along. So as I said, I've been in the trading and sales environment most of my career. So at UBS, Barclays, RBS, actually UBS and Barclays twice, and only recently, since 2018, I joined EFG as a pure play private bank, and I try to bring my experience in the investment banking world to wealth management. Yeah, that's in a nutshell my experience. Thank you.
Thank you. Thanks, Ivan. Andrew, if you want to go next.
Yeah, thank you. Thank you, David. You mightn't be a billionaire, Ivan, but you're looking $1 million. You're looking very suave and sophisticated. So yeah, so look, so my name's Andrew Powell. I'm currently the CEO of GSX Asia, which is a regulated exchange up in Malaysia in the Federal District of Labuan. But similar to Ivan, I started a little bit later in my life. I was probably a late joiner in financial markets, but I eventually got there in the mid-90s. Similar to Ivan, I worked with UBS. I was basically a one-stop shop person, so I worked there for 20 years. I had various roles in sort of technology, IT, eventually got a role on a dealing desk working nighttime. And then I experienced the internet boom in the late 90s, early 2000s. So I put my broking, trading background together with the IT experience to help deliver electronic trading. So again, similar to Ivan, yeah, I sort of adapted to change but had a long-term career at the Swiss bank. So, and about 3 or 4 years ago, I ended up sort of by chance, sort of looking at FinTech, seeing how I could use my experience. And then I ended up at the GSX group a couple of years ago. But hopefully there's still a few more chapters left in my career as we move forward. So yeah, I'm looking forward to the future, not so much reflecting on my past. Thank you.
Thank you. Thanks, Andrew. Very impressive career, just like Ivan. Okay, now last but not least, let's move on to Roland. If you can do a self-intro of yourself.
Sure. My name is Roland Schwinn. Thank you, first of all, for having me here today. It's a pleasure. I'm looking forward, not my first panel with Mr. Pell, so looking forward for another one. Yeah, so I started my career in 1990 with the DTB, Deutsche Terminbörse, the predecessor of Eurex, the first electronic derivative exchange in Germany, and had several roles over time with DTB and Deutsche Börse Group, later becoming Eurex, and then ended up here in Asia as the head of Asia, which I started from scratch. Built it up and also handed it over when I left Eurex. I had various other roles in that context. I was the global head of corporations also for Eurex, but also I was a shareholder director of the Bombay Stock Exchange in Mumbai, where we had stake in. Yeah, and then it happened that in the year of 2015, I became a research fellow at SMU. So my first project was a disruption in banking and digital banking and how to use blockchain in banking. So I got introduced a bit deeper into cryptocurrencies also, and also started investing there. So as a result, I ended up at Signum. I also did a lot of VC investments around that time, and one of them was also Signum. And yeah, so since 2018 September, I'm the Managing Director for Signum, in charge of business development and partnerships. Signum is a digital asset specialist bank with a banking license in Switzerland and an asset management license in Singapore.
Thank you. Thank you, Roland. Again, a very impressive career. Wow. All right. Okay, now we'll move on to the first question, actually, which will be more on the organization. Okay, as we know, every organization have different views when it comes to global strategies for digital assets or new technology. Okay, so my question to the speakers is, how does each organization view digital assets or new technology? And do you have any specific case studies that you would like to share? Okay, so I'll start off again with Ivan, and then I'll follow up with Andrew and then Roland. Okay, so Ivan, I understand you come from a global markets background, and we know EFG is very innovative, okay, when it comes to new technology. So perhaps you would like to share EFG global strategy for the next few years, and for example, Project Nathan. Over to you, Ivan.
Yeah, sure. So let's say at EFG, in terms of digital assets, we're still in the midst of trying to formulate a strategy, if you want. But definitely on the new technology, digitalization, there is a lot going on, and the pace of also implementation is being going up quite dramatically in the last couple of years. Since I joined, basically, I've seen this picking up pace quite dramatically. And I would say every area of the bank is involved in some form trying, testing, or implementing new technologies. And when it comes to what is going to happen in the next couple of years, I think that pace will continue to be very sustained, and I think the idea here is to remove as much as possible manual processes and frictions in the system in order to lower operational risk and all the manual processes to really release our workforce to do higher quality work. I think at the end of the day, this should translate in a better client experience, and I think when I narrow down into global markets, we have seen the need for a lot of the processes that are currently highly manual to be streamlined, or in a way move to workflows that involved a lot more technology, and that's where for example blockchain technology has been a very interesting project with the Project Nathan, because we really managed to find ways to solve problems by applying these to specific use cases that maybe we can discuss in a bit more detail. But at the end of the day, the real in a way benefit came in our experience with Project Nathan in removing a lot of the processes that are currently in the background, like operational, life cycle management, credit processes, everything that is a bit more distant from price discovery and execution, which are usually the target for a lot of technology involvement. Yeah.
Thank you, Ivan. And once again, thanks EFG for working very closely with STACS on Project Nathan. Thank you. Okay, now I'll move over to Andrew. Okay, Andrew, we know GSX is one of the first few stock exchange in the world to adopt DLT. So as a young stock exchange, can you share the rationale and also the train of thoughts behind building this digital stock exchange? Over to you.
Yeah, thank you, David. Yeah, look, I think we heard from previous panels, use cases about bonds, for example, ESG, environmental, social, governance bonds, and probably why not list them using latest technology. So if I'm going to list a green bond, we don't want pieces of paper flying around for settlement. Why don't we just settle that digitally? There's a similar argument at an exchange, and I probably would argue, Ivan just mentioned price discovery, but in the ideal world, I would suggest most securities are listed on an exchange platform, on a regulated exchange platform for greater transparency. But of course, that may not be the case. But if we are going to launch a stock exchange, and sure, let's use new technology. Let's not do T+3 settlement or T+2. So I'm sure Roland can appreciate that. Of course, with the Deutsche Terminbörse, the DTB, there's probably a T+3 or T+2 settlement cycle. But if we are going to open a new exchange, let's try to go for T0, T instant, which we do see in the crypto world. But in the regulated world, why can't we adopt these best practices? So yes, why can't we use STACS? So when STACS started out, initially the acronym was Securities Trading, Asset Clearing and Settlement System. So let's use new technology. Let's offer our member firms because we're intermediated, and people who invest in these securities, these digital assets, let's offer them T-instant, T+0 settlement. So I think that's the first catalyst, why we should use new technology. And the second catalyst would be also, as mentioned in previous panels, this whole concept of fractionalization and greater financial inclusion. So on the demand side, in this part of the world, there's 600 million people in ASEAN. There's talk of about 25 million of them who are high earners, not rich yet, so-called Henrys. So one will allow them to invest. So there's definitely demand out there, this whole theme of financial inclusion, and there's also supply. So let's let these Henrys invest in ESG products, particularly green bonds, and we talked about social inclusion in previous panels. So if you're going to offer these new products and have a whole new set of participants, why not offer them the best in technology? And I would suggest the best platform to do that would be on a regulated exchange.
Thank you.
Yeah, that'll be my answer. Thank you.
Thanks, Andrew. Appreciate your support as always. Yes, now it comes to Roland. Okay, Roland, as we know, Syndrome is the first digital bank, okay, that was announced last year. So perhaps you can share with the audience, the rationale behind why Syndrome actually choose to use new technology, okay, to build the digital bank. Over to you, Roland. We are on mute.
Sorry for that, yeah. So, yeah, thank you. Actually, Syndrome is a digital asset bank. So Syndrome has been founded and built to make digital assets bankable. And this goes back to the fact that some of the founders and also early management staff and investors like myself were invested into cryptocurrencies back then in the years 2015, 16, 17. And we saw the strong need to have stable banking interfaces and channels to get ready for institutional investors. So we all were dealing with institutional investors from various angles. But what you saw in 2017, the exchanges not being regulated, no regulated custodians, no settlement agents. So it was it was a challenge for a smaller hedge fund and family office to invest into Bitcoin, for example, what some of them did, which started in 2017, maybe even a bit earlier, but in 2017 we saw that boom. So it was the plan was made to build a bank to serve digital assets as a specialist for digital assets, including cryptocurrencies, but also including tokenized assets. So I mentioned earlier that I started as a research fellow at SMU in 2015. And once I understood a little bit more about the blockchain, I saw immediate use for how to apply it in financial market processing of financial market products. So having worked in trading and clearing and settlement for more than half of my lifetime, I still remember the trading on the pit, and then we moved trading electronically, and D2B back then was the first electronic derivative exchange and disrupted that entire space of pit trading back then. And then over time, we also see we moved more and more digital, also including custody of bonds, for example, which moved to electronic booking systems from a physical storage in underground vaults. So when I understood the blockchain, the first thing that came into my first discovery point was, with the blockchain or with a DLT technology-based system, you can trade, settle, and send it to custody with one single transaction only. So financial markets are usually, they have the trading part, and then they have the settlement part, and they have the custody part, and they have other pre-IPO, but other areas before and after that value chain and around that value chain. But with this technology, you can do a lot in just one transaction, and then you can build on that. You can even collateralize digitized assets and then lock it for lending, etc., etc. So the world of use cases is kind of unlimited what you can do. And it's also happening, if you look, for example, it's happening in the DeFi space just this year. And it kind of took off in March, April, and it led to a market cap, but in the crypto market cap of more than 10 billion US dollars being locked up within a very short time, within a few months only. So there's so many use cases, and we see it happening now. We see the tokenization happening. We see the institutional adoption of cryptocurrency investments, in particular Bitcoin, happening. And when Signum was built, it was decided to provide this bankable solution for institutional and corporate clients, but also high net worths and ultra high net worths, and to make digital assets bankable, building on the technology, linking it up with legacy systems such as a core banking system and the other pieces you need for that. And one important piece what we had to build was the AML engine to process incoming and outgoing blockchain transactions. And this is probably one of the most critical pieces what you need also to get a license to trade, settle and custodize digital assets. So the ambition at Signum has been, and this was also implemented, to put everything under one roof from a one-stop shop perspective. Back in the days in 2017, if you were an institutional investor and you wanted to buy Bitcoin, you had to deal with a desk, an OTC counterparty. You had to use a fiat settlement bank. There were only very few of them, mainly in the US back then. And if you also would to put it into custody, there were only very few custodians there. But most of them were not licensed back then. So we decided to build this one-stop shop under one roof, and also set it up in a proper regulatory environment in Switzerland and also here in Singapore, and offer those services which were offered by several players in unregulated or non-regulated entities to offer this as a bank.
If I could just make one point, which Roland mentioned, a very good point. In his previous life at DTB, the pricing mechanism for Europe, the interest rate pricing mechanism, the Deutsche Bund, the German Bund, was traded open outcry on the life floor, basically, and this is pre-Brexit, on an UK futures exchange, and the German Bund was trading there. And then overnight, liquidity switched when Eurex, which is part of the Deutsche Börse, initiated electronic trading. So you have a catalyst there, you have electronic trading finally killing off old-fashioned open outcry, where there's an old movie called Trading Places with Dan Aykroyd and Eddie Murphy. So maybe some of the younger people should watch that. But there was a catalyst there where electronic trading finally got rid of floor trading, and it was a significant move, a seismic shift overnight. The liquidity moved, and then you put that electronic trading with the birth of the internet over 20 years ago, and then suddenly you get the whole democratization of electronic trading from proprietary systems to anyone can basically trade as long as you have an account. So it's a very important point, which
thank you, Andrew. What I can add here, to be precise, yes, it resulted in an overnight switch, but I was part of the team actually. This team was led by Andreas Preuss, who also later became the CEO of Eurex and the deputy CEO of Deutsche Börse Group. So I was a part of Andreas' team, and it took us 8 years. It took us 8 years from January, or actually from November 1990, when the Bund and Bobl futures were launched at DTB, until we finally were able to pull the volume to DTB, which happened in 1998. So it took us 8 years preparation, but then it happened overnight. So
yeah, and I remember those days because I had to write down which order was it for. Was it for the open outcry or for the Eurex? But when it happened, it really happened.
Absolutely. Thank you.
Thank you. Thank you. Thanks, Roland and Andrew. It's very enlightening well, from two veterans. Okay, next we'll move on, maybe more towards the individual centric questions. So the first questions on this will be that maybe based more on your personal experience, okay? And we're able to share how has the usage of technology, okay, become more prevalent over the past few years, and moving forward, okay, what are some of the catalysts that you foresee that will propel, okay, the adoption of the digital assets or the new technology? Okay, again, I will start off with Ivan, and then followed by Andrew, and then Roland. Okay, Ivan, so as a veteran in the capital market, if you can share with us your experience.
Yeah, I guess because of the first, let's say, 15 years of my career, I was really focused on FX. I start from there, and also is one of those markets that, to some extent is still a bit escaping the full digitalization in a way. But anyway, in 1986, when I walked into the dealing room at UBS in Switzerland, I remember that most of the activity was taking place on the phone or telex. I'm sure some of you remember telex. And then there was just one position in the room. There was a small, like treasury dealing room in UBS in Lugano, in south of Switzerland. There was this trader who also had, a machine with a screen which was called Reuter dealing, and that was the first, in a way, tool to be able to transact trade FX electronically. And obviously the traders, especially those with quite a number of years under their belt, they were very far away from that tool. They didn't want to have anything to do with it. And they kept dealing on the phone, and they had assistants using the telex. But I was immediately attracted by this tool with a screen, with a green video, and that's how my first experience with technology related to the work I was doing started. And fast forward 10 years, every position in the dealing room had access to that sort of technology, and phone trading was already going down quite dramatically. Maybe only 50% of the trading activity was happening on voice. As the new generation came on board, it was easy to really use electronic trading tools rather than the old-fashioned phone, which was also significant cause of errors and misunderstandings while talking to different people with different language background and accent and so on. And then, after 10 years, let's say mid-90s, I remember EBS came about, and it was the first electronic FX broker. And obviously, it was a big fight to keep EBS at bay, because all the voice brokers would definitely lose their market share. But at the same time, a consortium of banks invested in that project, probably to hedge their bets in case something really came out of that. And then again, go another 5-6 years ahead, and EBS was basically one of the main tools for providing liquidity in the FX market. Although it's still pretty much an OTC market environment, it totally escaped, or mostly escaped, the exchanges. And then you go, through a period where every bank started to develop single dealer platforms to attract, clients' transaction, and to be able to distribute liquidity and trade more efficiently. And you come towards, the around 2010 to 2015, where some client segments would trade 80, 90% through those platforms, and no more phone calls, no more use of the old-fashioned, by now, Reuters dealing platform. So what I want to say here is that there was some disruption when I started in the market, but it usually took years to dislodge habits and incumbents. And in the last 10 years, we have seen a massive change. So everything is really accelerating. I think, as the generations are changing, and also our life habits are changing. I mean, just think about what you were doing with a mobile phone in the 90s, in the 2000s, and in the last 5 years. I mean, you hardly ever make a phone call nowadays. We should, question also whether, is the right name a mobile phone. It's not a mobile phone anymore. Mobile phone is some small accessory that is in the computer that you bring with you all day long. But, that has also put a lot of pressure to other areas like our business to modernize in a way, and to change, like workflows and procedures under which we operate. So I think that pressure will continue to be there, and we need to continue to challenge our own, current, structures and the way we do business, because otherwise we will be left behind. And that's why, for me, especially because I'm always a bit curious, it is important that I continue to, to stay at least in the game, not ahead of the game for sure, because unfortunately I still need to learn quite a lot, but being able to stay in the game and testing out new technologies, even making mistakes, going into some projects and trials, and then decide what is good and what is not good for us is a critical part of my job, I think.
Thank you. Thanks, Ivan. Thanks for sharing your personal experience. Andrew, okay, same question. So perhaps you can share with us your personal experience. How has the usage of the technology become prevalent, okay, over the past few years? And of course, moving forward, what are some of the catalysts that you think will propel the adoption of the digital assets?
Yeah, thanks, David. I think you always need two catalysts. So as Ivan alluded to, there was the advent of electronic trading, and often it was the FX market who were at the vanguard. Then maybe the futures market, the exchange traded derivatives, and the stock market followed, and a long last was always the bond market. Yeah, so I think 20 years ago, I think the catalyst was the advent of electronic trading combined with the internet. So you got an increased demographic of people who would actually trade rather than giving orders on the phone to someone in a pit. So so you always need two catalysts or more, in my opinion. I think over 10 years ago with the financial crisis, we saw somewhat a lack of confidence in central banks. But just previous to that, we had seen an explosion in high frequency trading. So at UBS, we were some clients doing up to $1 billion notional a day in Japan. So clients were coming in, buying the stock and shorting the future, basically risk neutral trades, so-called statistical arbitrage trades. But even back then, we needed real time confirmation. So, we would use 128-bit encrypted technology to give the clients their real-time fills, and that was often from Symantec, where the guy called Hal Finney worked. So Hal Finney goes out in history as the guy who received the Bitcoin from Satoshi. So even back then there was a catalyst, of people querying the auspices of central banks, and there's this encryption technology, and I would argue they laid the foundation for what we see now as cryptocurrencies. And moving forward to today, I see sort of two catalysts back then. Now I see probably two or three catalysts. I see new blockchain technology. I see places still, central banks printing money, those who can do it. So some of the OECD nations, even Australia is now doing yield management, so-called quantitative easing asset purchases, which is actually going quite effectively. But if you look at ASEAN, not many countries here can do it. Singapore can't do it because they target FX rather than the bond market. So how is this part of the world, the 600 million people, going to raise capital to invest in ESG worthy projects? And I think another catalyst, which has just happened during COVID, is two things. I see in America, the DTCC, which was mentioned before, is finally going to do away with paper. They're going to go to fully electronic, so-called dematerialized system. So no more paper. And in Japan, it's going to be the death of the fax machine, finally. So I think that's going to be another catalyst, is going to be the electronic representation of shares, bonds, or whatever, so-called dematerialization. And from dematerialization, it's a very short step to tokenization. So particularly in this part of the world, I see it's demand and supply. I see these Henrys, these so-called high earners, not rich yet, 25 million, even more of the 600 million people want to invest in ESG type products. So that's the supply. So not just the E, the so-called green bonds, but increasingly in the S, social responsible. So I think it's very exciting with the announcement of Singapore hosting Davos next year. So even if you believe in it or you don't believe in it, there will be a discussion about the Great Reset. So shareholders become stakeholders. More monies from big pension funds being allocated to the S in ESG. So I think there's a new catalyst on the way, and it's been partly driven by the last 12 months. So that's the exciting future I see.
Thank you. Thanks, Andrew. Thanks for sharing your personal experience. And last but not least, Roland. Okay, we know that you have spent large part of your time at Deutsche Post, and now you are with Syndon, building up a digital bank. So perhaps you also can share your personal experience with us on this same question.
Yeah, I think what we see happening right now, and we have seen an immense increase and acceleration during the course of this year, is the institutional adoption of digital assets. I would not say it starts with Bitcoin, but Bitcoin has become a serious asset now. If you, almost every week, you can see another celebrity, financial market celebrity or hedge fund celebrity promoting Bitcoin, which definitely was not the case 3, 4, 5 years ago. And you see people like the CEO of MicroStrategy, Michael Saylor, going loud and explaining why he invested 425 million USD in Bitcoin, plus another 300 out of his own pocket. So you see all those prominent people going out. And of course, this is for those people who have been watching it on the sideline or being skeptical of the sideline, but still being professional investors and trying to look at it from an investment perspective, and were struggling also to make their moves. I think this is a very strong messages. Based on the fact that we have now banks, regulated banks who can serve that space, like Signum, where you have regulated custodians, where you have regulated derivative exchanges such as the CME and also IC serving that space and offering derivatives on Bitcoin. I think this things are ready now. So, and plus all the channels you have from a retail perspective, be it the large American online brokers, be it PayPal recently, be it Revolut payment services. There's so many channels now compared to 3 years ago. But this is only the cryptocurrency side, and plus, which has a lot of fascinating aspects, including the smart contracts, for example, the Ethereum protocol, and also other new protocols, and all these things you can do with that. But interestingly interestingly, besides the institutional adoption from an investment perspective, we see also an institutional adoption also from a technology usage perspective. And this has started probably a bit earlier even than the investment side. At Deutsche Börse, we had already colleagues working on proof of concepts in the year 2014 to 15. Back then, they were already working with IBM Hyperledger and also later with R3 and other corporate blockchain service providers, and working on the first use cases to experiment where can you actually apply the technology and where can you create efficiencies. But now we see kind of unfolding that entire development. And I think a lot of large institutions have done their homeworks over time. They are more experienced now to also use the technology, use the tool sets, also have looked into how to solve AML and KYC aspects around it, et cetera, et cetera. So I think a lot of things have happened in the last 3-4 years. And I would even go that far to say that the adoption on the technology side, and that includes also the tokenization of assets, is correlating strongly with the price of Bitcoin. So you might have seen that only 2 weeks ago, Signum made an announcement that we are launching our tokenization platform called Designate, and also we will be launching in January our OTF of our open trading facility called Synex, so a secondary market trading place run under Signum Bank to trade digital assets. And with the same announcement, we're able to announce 6 tokenization projects across different industries, from even arts and collectibles, a investment fund, and even automotive company. So it is quite an interesting spectrum of industries now looking into the benefits of how we can use the technology. And what Andrew has said earlier on, I think is a very important point. And this is still where some regulatory environments are still working on solutions, is exactly to provide the regulatory foundation to make a token representing an asset without too many workarounds. And this is where Switzerland is a bit advanced. Switzerland will be launching a new DLT regulation where it is clearly stated that a digital token can represent an asset. For example, can represent a share directly without having a certificate or anything in between. I think this is a major step here also into to accelerate that development. And when we look into all these factors, which currently lead to the adoption on the investment side, but also on the technology side, then definitely one thing is absolutely needed for that. And we see it happening is the regulatory clarity and regulatory fundaments, which is not a level playing field yet. Some countries are more advanced than others, and just mentioned Switzerland, but also Singapore is very advanced in some aspects. And those countries, of course, will attract a lot of business and have already attracted a lot of business around DLT and digital assets. So we are very excited to be here at the right moment in time and also being ready to serve that space.
Thank you. Thanks, Roland. Okay, now we'll move on to the last question before we go to the Q&A. So this last question basically will still be on your individual personal experience. Okay, so the question is, how will traditional banks, okay, such as maybe the EFG, coexist with the new challenger, which will be the digital banks and the stock exchange, like Sidram and GSX? So for this round, maybe we can start off with Roland, and we follow by Ivan, and then we'll end off with Andrew.
Thank you. Yeah, this is also exactly what Signum is doing already, working with other traditional financial institutions and banks. So I mentioned already that we've seen an acceleration during the course of this year, but we saw a small boom already in 2017, but then it cooled off also with the price developments in the crypto space in 2018 and 2019, but now it's all back. And Signum has just onboarded the first bank a few months ago to provide white label B2B services to enable their clients to trade and settle and also custodize cryptocurrencies such as Bitcoin, Ethereum, XRP. It's a white labeled model where other banks can just plug into Signum, and Signum basically serves that space, the trading part, settlement and custody part for them. So for the client of this bank, this partner bank, they see another product on the screen besides the nested shares. They can also then trade Bitcoin and just hit a button and it's getting all served all the way down into banking custody. I think we see, based on the fact that we have a couple of additional banks now in the pipeline here being processed, it shows you also that there's a lot of demand in particular from private wealth clients and in particular in the segment of ultra high net worths. And for in particular smaller banks, but also larger banks, there's always the question, see, when I see a demand coming, which requires an investment into a new infrastructure, and also something which is new to us, do I build it by myself, or do I just buy the service? So we went through it, we built it by ourselves, we know what it means. It took us kind of all where we are today, kind of 2.5 years altogether. But for a private wealth bank, for example, or a bank with a lot of private wealth customers, and if they would do the same, they need at least also 2 years for that. So it's by far faster just to plug in and set up a white labeled banking solution and be able to serve your customers tomorrow rather than 2 years.
Thank you. Thanks, Roland.
Maybe one important thing to add, and this is a very important piece here, I mentioned it before, it's the AML module. And this is where a lot of banks, we see a lot of news now these days. This bank wants to buy custody and this bank wants to do that and that, most of them custody, but custody is also not an isolated element when it comes to DLT technology. It's slightly different in the traditional space where you have the classical elements of the value chain, trading, clearing, settlement, and custody, as I mentioned earlier. But with the blockchain, again, you can do it in one transaction, send it straight into custody. So you need to link it up with trading, you need to link it up with settlement, you need to link it up also with AML, and you might want to link it up with lending services, etc. So one very important piece in that context is the AML tool, which also Signum has developed as a proprietary solution to process all ingoing and outgoing transactions for the source of funds and also destination of funds, to make it really bankable and also to make it clean for other banks and financial institutions and buy-side investors to be safe with regards to the quality of the cryptocurrencies they get.
Thanks, Roland. Thank you very much. And now we move on to Ivan. If Ivan, you can share with us what's your view, how will the traditional banks like the EFG able to coexist with the new digital banks and stock exchange?
So my view is, pretty much along the same lines as Roland. Is that banks like us, although it might not mean that we will do that, but my view is that wealth management players like us will very quickly realize that having strategic partnerships or even investments in specialized companies like Signum, for example, will be the way forward, because it really gives the ability to offer clients which are active in both traditional investments and crypto assets. Give the ability to those clients to be able to manage across the full spectrum of their investment, and also it really cuts the time to market dramatically, because acquiring all that knowledge and infrastructure is a huge investment in terms of time and money that pretty much nobody has at the moment. So I definitely think this is the at least initially will be the way. So I can see in the next couple of years more and more alliances and partnership forming, and a coexistence of traditional versus new will be, in my opinion, the way forward. This also allows both parties to learn from each other, which I still think, because of the huge amount of volumes and traded in the traditional space, there is a lot that even for the crypto asset specialist, there is a lot that they can contribute in learning from the traditional space and trying to transform some of the legacy, in a way, workflows and investment procedures into something new that can grow even further. So I can see a lot of advantages in working together going forward.
Maybe I'll jump in quickly because I know time's nearly up.
Yes.
Andrew, yes. So look, if maybe I can just sort of comment just on sort of geographical dynamics. I noticed in the previous panel, Mr. Urs Sauer was saying that a lot of the investment, a lot of the activity has been happening in North America, but I'll suggest that I think this part of the world is where, particularly ASEAN, is where a lot of the dynamics are going to play out. I mean, look, if you just look at this panel, I'm representing a European exchange here, albeit a small one, the Gibraltar Stock Exchange. We've got Roland. There's the famous Swiss, Singapore, so-called Swingapore partnership, and we have Ivan in Hong Kong, with one of the leading Swiss banks. And I know one of your previous panelists or future panelists will be from the STACS exchange. So there's definitely an ASEAN focus for at least a lot of the European players. I mean, of course, a lot of the areas such as Latin America and Africa and Middle East have got great potential, but when it actually comes to headcount, there's a huge focus here. So my history teacher reminded me that the so-called Marxist revolution, was meant to happen in industrial countries such as Germany or the United Kingdom back in the 19th century, but it actually happened in Russia in an agrarian society. So similar, I think people are looking to, say, the US for this next digital revolution to happen, but I think it's going to happen here in this part of the world, for the points I was mentioning before, demand and supply. There's 600 million people here who want to invest in bankable, sustainable assets. And there's two ways you can do that. You can have a Singapore type paradigm where you have a sandbox, and we've seen bond blocks emerge from that, which is fantastic, on a bond issuance or a bond trading with the SGX. Malaysia is different and Labuan's different, where you use the current regulatory framework and you fit into that. So congratulations again to the STACS team with your completion of your proof of concept with Bursa Malaysia. Similarly with ourselves, we want to go live, particularly with our ESG vertical. So I think, even though I was a bit critical of the bond market, I think the bond market is going to be the one which is going to drive this revolution. So that's my personal view, and I can also see that the STACS teams involved there, also SGX, and I mentioned bond blocks. So I think my comment on this is that we'll be involving the existing players. This is not going to be throwing out. We're not throwing everyone we're not throwing all the toys out of the pram, so to speak. It's basically keyhole surgery. So in our instance, we're an exchange like anyone else, with us using new technology just to solve certain frictions. So, I don't think the banks, the existing exchanges and the existing asset managers, the buy side, sell side, even the vendors are going anywhere. I just see more efficiency. And as Ben So, the managing director of STACS, said earlier on, the United Nations sees this as a $1 trillion potential to list more inclusive assets. So I just see the pie getting a lot bigger and working with the incumbents. So yeah, I'm very positive that it's going to be a bigger pie. We won't be cannibalizing each other.
Okay. Yep. Thank you. Thanks, Andrew. Yeah, let's move on to maybe to tackle one or two of the Q&A. Okay, so the first question that I can see that is for Ivan. You mentioned about a DLT project. What will you focus on? And were there any quantifiable benefits that you can share?
Yes, thanks for the question. So initially, we focused on trying to solve an existing problem by leveraging the DLT technology, which it took me quite a long time to understand. Still not fully understand, but at least now I can see the benefit. And we started with one of the most manual processes that we have in structured products, which is for an FX accumulator. And FX accumulator from basically from trade inception, which is price discovery, all the way to the life cycle management through fixings and knockouts and so on, is a very manually intensive process, and is involving several parties, from obviously counterparties trading, our trading unit, credit operations, and risk management. And to sum it up, if we have a series of, let's say, 20 actions that are happening in a sequence to manage the product during the life cycle, let's say that 1/3 will involve the front office, and the rest is in the background or operations, life cycle management. And the quick result for us was that although there is a lot of optimization done on the front office part, the real massive benefit was on the operational part, where most of the activity could be automated. So basically, almost all the sequence of events was automated completely, and that's how the proof of concept that we ran basically ended. We really saw the benefits in the back end, where most of the risk and manual processes and cost is involved. So yeah, that's where the real benefits are.
Thank you. Thanks, Ivan. Okay, maybe we'll just take one more questions. The question is, what were some of the best combinations of technology and use case in the past you have witnessed in the financial markets? Maybe Andrew or Roland, you can take this question.
Yeah, I'll just quickly say, the early 2000s was the internet technology, having a World Wide Web, the internet and electronic trading, put them two together. You have exchanges moving from a proprietary platform. So in my case, the Sydney Futures Exchange and the Cycom terminal, which I used to use as a night broker, suddenly you could display on the internet and give access to a broader participation base. So I'd say that internet technology and electronic trading.
Thank you. Roland, you have anything to add to that question?
I fully agree with Andrew, and I'm very grateful that I was able to be not only a time witness, but also to be part of the first revolution of electronic trading with DTB back then. And now I'm very proud also to be a part of the second revolution of DLT technologies and use that in financial market applications in particular.
You're looking more and more like Che Guevara, the famous revolutionary.
Cool. Great, thank you. Okay, I think we have come to the end of the panel. Once again, we thank all of you, our three speakers, for taking the time to participate in this panel. And to the audience, we hope you have enjoyed the discussion as well. Thank you. Thanks, everyone.
Thank you.
Thank you very much.
Thank you.
Oh, thank you. Bye-bye.
Bye.